Hello everybody. I've gotten this video request a few times now. Basically what I'm going to be showing you in this video is the difference between a properly structured IUL and a not properly structured IUL, or in other words, a traditional IUL versus a high cash value IUL. My name is Ryan Hernandez. I'm a licensed financial professional and I set up high cash value properly structured IULs for my clients. If at any point in this video you like what you see and you want to potentially open up an IUL with me, or if you just want me to illustrate an IUL for you just to kind of show you what it looks like specifically for you, your age, and how much you're trying to contribute per month, go ahead and just click the first link in the description of this video to book a free IUL consultation with me. Let's go ahead and just get right into the video. So what I have here is I'm just going to be running this illustration for a 32-year-old male who is in good health. And what we're going to be doing is we're going to be showing the traditional IUL or a not properly structured IUL. So I just have the death benefit set to $1 million. That's what most agents do. And I have this set to increasing death benefit option. Again, most agents do this. This individual is going to be putting in $500 a month until age 65. And yeah, that's pretty much it. So now let's look at the report. Let's look at the numbers in terms of what this policy actually looks like. So the first red flag, that just so that you know when a policy is not properly structured, is seeing zeros here. So this is the last thing you want to see, is zeros in the net surrender value. Now, the reason why this is happening is essentially just because the death benefit is so high, it's eating into all the gains of the policy and not allowing you to take out loans for the first 3 years. Another thing too is that you put in $6,000 in year one, and this dollar amount is about $4,000. Now this number should normally be about 92% of what you put in, and this is definitely under that amount. And another thing to look at is to see if the policy ever lapses. Now this policy does lapse. It lapses in age 97. So if you live until 97 or 98 or 99 or 100 or any years past that, you basically don't have any more life insurance. Now the IUL, yes, is a permanent life insurance policy when structured correctly. So depending on how bad the policy is structured, I've seen policies that lapse like within 10 years of having them. Now, the IUL is not supposed to be like that. The IUL is a cash value life insurance policy, which means that it's supposed to be used for cash value accumulation, not for death benefit, right? You can use it for cash value and also like the fact that you have life insurance with it, of course, but these policies normally should not be specifically structured for the death benefit purposes. Another thing to take a look at here as well is the cost of insurance. Now we can see here in year one that the cost of insurance for this policy in year one for $1 million is $92. Now this specific IUL that I structure, this policy is known to have very low costs of insurance and low cost of fees, which is really why my IUL performs much better than 99% of IULs out there. I feel confident saying 100%. And you can also see here that per 1,000 base fees are pretty high. And yeah, these two fees are pretty much higher just because the death benefit is much higher. So if we go ahead and just go to the case design, and if we change two things, if the only thing we change here is changes to minimum non-MAC death benefit, you always want to make sure it's a minimum non-MAC death benefit, and you want to change this to optimal switch. Now I have tons of other videos explaining why you do that, but in just a quick nutshell, it's just optimal for the lowest cost of fees and the highest emphasis on cash value. Really, that's like the only difference. Now we're just gonna wait a couple seconds for this to load. Okay, so this just loaded up here. Let's take a look at it and just look at what the differences are. So we can see here right away, no zeros here at all. And this is really good. So now after year one, you're able to go ahead and take a $2,500 loan out of this policy if you want to or need to. you can see that the death benefit dropped all the way from $1 million to 141,000. Another thing to look at too, let's see if this policy ever lapses. I'm curious. I don't. Again, it shouldn't. It should run until age 120, and it does. It runs all the way until age 120. Now let's go ahead and take a look at the fees. So this dropped all the way down to $15 for the whole year. 16, 23. Now these are all in the 20s and 30s. These were in like the 200s, 300s, 400s, and 500s before. This dropped all the way from, I don't remember. I want to say it was like $1,500. Obviously you guys will be watching the video, so you guys can just go back and rewatch, but I don't remember. But yeah, I know that this number is significantly cheaper. I do know that it was over 1,000 for sure. Now it's 411, so that's dropped significantly. Now obviously, there's two things that people always complain about in my comments talking about the IUL: the fees, and that you don't get access to any of your money until like year 7 to 10. Now, you can clearly tell, if it's properly structured, the fees are very minimal. Like, you're paying $15 for the whole year for this, $120 and $480. This is only here for the first 10 years. This is the per 1,000 base. This is simply just to help mitigate risk on the insurance company. And this disappears after 10 years. So you can see here, it's all gone now. These are all gone. You'll never see those again. And so really, again, with this specific company, the fees are extremely low. I don't really see any companies with lower fees than this. And then again here, the cash value growth looks great in here. Now, obviously, the more money you put into the policy, the bigger you're going to see the reflection of the difference between not properly structured and properly structured. I was just showing $500 a month just because, another thing that a lot of people complain about is when I give examples of like $1,000 a month, they're like, that's so unrealistic when 99% of my clients put $3,000 a month or more, just because of, the how in depth I go into the videos that I make. A lot of the clients who I work with are high net worth clients. So I hope that this was able to kind of explain a little bit further, like, why does it matter if your IUL is properly structured or not? What changes? What are the differences? What are some things to kind of look for? What are some indicators? I only touched on a couple things in this video because I just wanted to really put an emphasis on these couple things. If you want to go ahead and watch a video that really goes in depth of what are all the things to look for to make sure that this is like a right IUL for you. I didn't even touch on alternative loans in this video. I didn't touch on a lot of things in this video. So go ahead and check out the video that I have in my IUL playlist. That's called How to Know If Your IUL is Properly Structured or Not. I go over probably like 5 or 6 more things that I did not mention in this video. If you're in the market for an IUL and you want a properly structured high cash value IUL, please use the first link in my description to go ahead and book a free IUL consultation with me so that I can go ahead and set up an illustration with you. We can submit an application and we can do business together.